let's get to it. So we were talking about um, market structure.
Mm-hmm.
Okay, so and wetin we been talk about market structure. I don't know if you could remember what we talked about on market structure. Can you remember?
I remember.
Okay, so we said that the market has five waves, like wave one, two, three,
That's 5.
four. This is five. So this is basically how the market moves, because the market doesn't move in a straight line like this. The market doesn't move like this. It moves in up down type of movement. You understand? So, and with one, with three, and with five are impulsive type of movement. Like they are impulsive, like they move out, they have volume in them. Like this type of movement, they are this type of movements. You understand? So this type of impulsive moves are called wave one. They are wave one, wave three, and wave five. They are always impulsive. But wave two and wave three and wave four are corrective in nature. So wave one, wave three, and wave five are always going front. They are always going forward. But wave two and wave four, they are always going against the trend. They are always going against the trend. You understand? Do you understand what I mean?
Mm-hmm.
Okay. So now for the market now, yeah, to have a wave three, if the market goes up, down, up, down, up, for the market to continue going up, yeah, it needs to be going above the previous high. It needs to be going above the previous highs like this. It needs to be breaking the highs, because these highs are point of reversals. These points, this V, it's like a V type of movement.
Is it our name? This. Hmm. Who have this chewing gum step by step from my
You understand?
This. Yeah, I understand.
Yeah. So now these correction, these are they are in a V type of shape. They are in a V type of shape. So if the market is going up, if the market is making higher highs and higher lows, it needs to be taken out, it needs to be crossing above the V, above the V that are at the other side. You understand? So
Mm.
these movements, like it's what is being called break of market structure. You understand? Let me put this line chart. So we used this line chart the other time. Okay, let's use this uptrend. You could see that this V type of shapes, you could see that it closed above, it broke the V, it closed above, it first closed above, it closed above. And if we do something like this, this movement is basically this thing. This is just the same thing. If it is breaking highs like this, breaking the highs, the V part, breaking the highs, you understand? Then you should know that the market is pushing up. Like the market is, that means the market is making higher highs and higher lows, and it is going in an uptrend. Let me higher high, higher low. So higher high, higher low, higher high. So if the market actually wants to continue going up, if the market wants to continue going up, it should keep on making higher highs and higher low and keep on breaking this part and keep on breaking these highs. Let's say the market wants to continue going up now. This is what it's going to do. It will come down again, goes up, come down again, goes up, come down again. You understand? So this is the movement that it will be doing. It will be breaking the highs. It will be taking out the highs. Do you understand? Like just like this, it will be breaking the V part, And for example, if we go back to this candlestick, you could see that it is two candles. You understand? These are the high that the market is actually breaking. It is breaking these highs. It is breaking these highs, these highs, these highs. On the line chart shows you the close, but I like to use the wick to represent the break.
But this other one that you mark, it didn't break this last one now.
Which one?
Come down here.
This
After
one?
this one.
This one?
The last one you marked.
This one? Or this one?
Yes, the other one.
This one?
Yes.
It broke the high. This green candle broke the high of this one. So it broke the structure. This candle even
Why
broke...
did you not mark this middle one? Because it didn't break this other one there.
This
Why are
one?
you marking it that it broke? Okay.
No, ask your question. I want to understand what you mean. So you said why I marked... Did you ask why I marked this one?
Yes.
I marked this one because this candle, it's also a structure. You understand? So
Yes.
yes. So this candle also broke this structure and broke this structure too. Because yes, because the candle closed here. So if I want, I could just remove this one and just take the longest one. You understand? Yes. If I want, I can remove this one and just take this one. But I just wanted to show you the structures it broke. You understand? But you are correct if you wanted to mark only this one. Do you understand? Yes. But sometimes when they break this one, you understand? Maybe this candle now, stopped around this place and did not break this high, but it broke this one. They might give you a setup. You understand? They might give you something like a trade, a setup to take, a trade setup around here, so that it will enter, so that you will enter and now take it upwards. But the first candle did not break this one. It just broke this one, but it didn't reach here. But you can also use this one as a break of structure. Do you understand what I mean? Like it's not actually a must that, or it's not actually very that important that you will use this one. But if you get a break of structure, since you've been getting break of structures to the upside, if you get another one and you get a clean setup here, you can take the trade. Do you understand?
Okay.
Yeah, so this is also a break of structure. This is also a break of structure because this candle broke the structure of this one and broke the structure of this one. So even if it broke only this one and didn't reach here, it's also a break of structure. You can take any trade here to go up. Do you understand? So yeah, so that is the line chart. Okay, now let's now say we were going up, making higher highs and higher lows. you know, making higher highs and higher lows. So this is the market going heavily bullish. So it's been breaking these highs, the V part, it's been breaking the V part, been breaking, taking out the highs. So this is that, yes, the market is very bullish. The market is very bullish, you know. So now, here, we were expecting the market to continue going up since it's been going up from this place, from this origin. So now the market did something like this. Did you see what the market did?
Mm-hmm.
It was going up. We were breaking highs, making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Then we reached here. The market came down, went up, stopped here, and then dropped. Why? Why is it dropping? We've been in an uptrend and we expect the market to continue giving us highs like this, you know. We want to be going up, but suddenly it stopped and did something like this.
Mm-hmm.
You know, this is a high too. This is a high, but it is a lower high because it is lower than this high.
Okay.
Yes. So this place now is a lower high. This place is a high, but it is lower than this one. So we call it a low high. So it is a lower high. So it made a lower high. It made a lower high because the market can't continue going up. The market will always correct itself. It will always correct itself because that is its natural characteristics. It has to always correct itself. You understand? So the market can't continue going up. It can't continue going down. If it stretches itself for a very long time, it contracts. It stretches itself, it contracts. It's contracting, it is correcting because there are people that are taking profits. There are people in the market that are taking profits from trading and from their setup already. You understand? So when those traders and when those investors start taking their profits, the market will start pulling back. That is when you get correction. That is when you get this wave 2 and wave 3. Because most times when they make the first move, when the market makes the first move, not everybody do. Most people don't know when they make the first move. It's only the institutions that make this trade. They are the only ones that know when they make this move. So on this first move that the market does, not every trader are getting in already there. You understand? Because sometimes it's just a boom type of movement, like a boom type of movement. You understand? So and it usually corrects itself because those ones that were opportune to buy at this first move, once it goes up high a little bit, they will start taking profit because some will be scared, some will be like, man, it has gone up a little bit, I want to take my profit. So when those investors that bought here are taking profit around this place, the market will start correcting, it will start pulling back. So now those
So how do you know now
went to
when to make the move?
when
Because you're
it will make the
saying.
move. No one actually knows when it will make the move, unless you are analyzing. When you get a good knowledge about your structure, your market structure, then you will know when it will be making those moves. You understand? Because you will know when it is bullish or when it is bearish. You understand? And when it is bullish, those type of candles are usually, like, you would actually see them sometimes, especially when you're trading supply and demand. You understand? Because supply and demand is just the market showing its hands to traders and investors. You understand? So we would come to that part, but you would know by seeing the momentum of the candle. The size of the candle, it's usually what actually indicates it. So most people don't usually know when they will make that move. You understand? Unless you see it, or unless sometimes news, or sometimes they could actually make that type of move, then you will wait for a correction. You understand? So it's usually at this correction that traders enter. It's usually at this correction. You understand? So at this correction, this is actually where we make our demand. This is the origin of our supply and demand at this correction.
Okay.
Yes, so this is usually where we take our trade, then for the market to continue going up. You understand? But we are not doing supply and demand right now. We are just trying to talk about market structure in its simplest form. So we will still come to a demand. So most times when the market comes to this demand, those investors that didn't enter here, like, it makes a heavy type of movement, but we will talk about that later. So do you understand what I mean so far?
Yes.
Okay. Okay. So we were here. Now the market didn't break this high. We've been going up. We should continue going up. It had no reason to just keep dropping. But you can't question the market. The market is always correct, and the market is always right. So it made a low, because this high, it's also a high, but it didn't pass this one. So it dropped, because the strength, it's already weak, like, because the strength is been going up for a very long time, and people are taking profit even when it's going up. So you could see that it has every reason to slow down a little bit. You understand? So now
Mm-hmm.
it's made this lower high, came down. It's made this low, went up, didn't pass this one, then dropped. Do you understand what happened here now? When it came up,
Mm.
it wanted to go up again to continue this trend, but there were no buyers like that anymore to continue pushing this thing up, because the market is getting weak, and because many people have actually taken profits. Do you understand what I mean?
Mm-hmm.
Yeah. So now it's now dropped like this, and broke the structure of this one, this one. When this came, it broke the lower V of this, the lower V. There is an up V and a lower V. Like this correction
Yes.
type of movement, there's a correction type of movement that happened here too. So since it's coming down, it now started breaking the inner V, the lower V, the inside V. That's the higher lows of this trend, this upper one. It started breaking the lows. It created a low here when it went up, and then dropped again. It broke the low. Do you understand? So now
Okay.
it started making lower lows.
Mm-hmm.
So it started making lows. This is also a low. It started making lows, and then keep coming down. It kept on coming down. it kept on coming down. So could you see the movement? Do you see the movement that it's making? Going from an uptrend, breaking the highs, breaking the highs, breaking the highs, breaking the highs, went here, came down, couldn't pass the high of this one. It got weakened. It came down, went up again, couldn't beat this high again. It dropped again, went up, couldn't beat this high again. It dropped the more. Went up, couldn't beat this high, it came down, dropped the more. Do you understand what I mean? So this
Yes.
is when you see that, yes, the market is breaking structures to the downside. It is taking the lows. It is taking the lows. It is taking the lows. And that is also what happened. What happened when it wants to go from a downtrend to an uptrend. So this is what happens from downtrend to an uptrend. So it was coming down, then it went up, came down, went up, came down, went up. So it was dropping, came up, came down. This low didn't pass this low. This low, since we've been dropping here, so this low, we should continue to be dropping and start doing stuff like this. Do you understand what I mean? We should continue going down. But here, it stopped going down and just gave us something like a higher leg or something like that without passing this one. You can always, if you get confused about it, you can always use this your trend line to mark something like this. You will see that it did not make an equal type of balance. It was just like this. And if you check here, you can always use this to mark if you're getting confused about it, you can always use this to mark a reversal side. You understand? So here, it made something like a high that did not pass this one. Do you understand what I mean here? Okay, so it went up. When it went up, it broke this one, this one. It didn't break this one.
Are you sure it didn't break it? It didn't break it.
No, it didn't break it. It stopped here, then came down. Straight like this. It stopped here, so it did not break this structure, but it broke all these highs that we are facing it, that we are just sideways. It broke all these highs. One, we got two confirmations because this low, let's mark it with this color. So this low did not pass this low. So this is actually telling us something. This low did not pass this low. Pardon? What do you say?
You said it's actually telling us something. Telling us like what?
Yeah, telling us that the trend is changing. Because
Okay.
if it wants to continue going down, they should continue going down like this. But they just stopped here.
Okay.
So it is indicating that maybe they want to actually change their trend. You understand?
Okay.
So it stopped here, then started going up, then breaking the structures by the side. It came down again and then went up, breaking this structure. So this structure was actually broken here. So they've automatically changed from a downtrend to an uptrend. Then they start doing something like this.
Mm,
Do you understand this explanation now? You followed me like, so now here, they are now breaking highs. They started breaking highs again. So this is just the behavioral pattern of the market. This is just how the market moves. It breaks a high, it pulls back, you enter, then you move. It breaks a high, it pulls back. See it breaks this high, it pulls back, then you enter. Sometimes it pulls back here, but it shouldn't pass this one. You enter, then it goes up. It breaks a high, it goes, pulls back, then you enter, it goes up. That is how it works. That is how the market moves. You understand?
mm-hmm.
No. Do you understand what I mean? So, um, do you have any questions here? I want to know if you do have any questions here.
No.
Ask me questions. I want questions. Ask questions.
No, I don't have any question. I don't have any question. We
Oh,
can continue.
okay, okay. So, that is basically what happened here. We were breaking up, it went up, pulled back. Whenever it breaks, it pulls back for investors to get in to make the next move. If it breaks, it pulls back, you enter. That is what happened. It keeps going up. It keeps going up until it starts getting weak. Then it starts pulling back. It starts pulling back. It starts pulling back until it regains its strength again. Then it starts going up. Then it starts going up. It starts going up. This is just the structure. This is basically what is called market structure. This is market structure. So it keeps breaking up, it pulls back. Each time it breaks a high, it pulls back. Each time it breaks a high, it pulls back. So later when we start discussing about support and resistance, we are still going to use this as these places are support levels. These places are support or resistance level. These places are support and resistance level. These places are support and resistance level. But we are going to talk about it on a later this thing. So let's just try to so look at this. Broke this high. This high was not broken. This high was not broken. This high was broken here. But since it came up, it broke this high here, came down, went up, did not break this high, did not break this high, came down again, went up, came down, went up, broke this high, came down, went up, broke this high.
Mm-hmm.
Can you see what's happening? It kept
Yes.
breaking the highs, the toppest, if you want, you call it, if you want to use it. So then it went here, came down, went up. It did not break this high.
Mm-hmm.
It did not break this high. Then it made a lower high. Can you see? It made a lower high. Then came down, broke this low. Then came down, broke this low. This movement broke this low. It came up, it came down, went up, came down, broke these lows. This one, this small one, this small one. Then it came out, went up, came down, went up, came down, it did not come down again to continue going in this direction. Can you see what happened? It went up, it should continue going down, but it didn't go down. It stopped here, and then oof, broke this high, pumped and broke this high. Can you see? It continued. This one was just a correction. Then it went up, came down, went up, broke this high. So this for you is a continuation that yes, this market should continue going up, and you could see what happened. This was the whole confirmation you needed, because it broke this major high. You were looking at this high as a point of reference that if the market actually breaks it, then yes, they are going up. They are going up, and here it broke it here. So if we turn to the normal candlesticks, you're going to see the candles and the spots where we marked. So can you see? This week did not break the high. It was this candle that broke the high. Because if you put it in a line chart, you will not see that candle. You will just see the body of the candle. That's this body. You will not see this one. You will see just this one. So that is to tell you that wicks, even if a wick crossed it, it did not break the structure. It must go with the body, not with the wick. You understand? Do you understand?
Yes.
Okay. So it broke this structure, came down, went up, broke this structure, went up, came down, did not break this structure again, made lows, broke structure, broke this one, broke this one, broke this one, went up, came down, did not break this one. It started going up again and broke this structure. So this was a confirmation that yes, the market is heavily bullish, and you could see the movement. It's heavily bullish because you are looking. Let me tell you, yeah. If you want to know if the market is actually trending, just focus your eyes and look at the color of the candles that are actually printing. If you look at this chart like this, you will just see that you dominantly see green candles. So if you're constantly seeing green candles, just look at the right hand side. Look at what it is breaking by the right hand side. Look at the structures that are at the the left hand side, not at the right hand side. The left hand side, if you are going in an upward direction, if you are going in an uptrend, you should be looking at the right hand side to see which structures are being broken by the left hand side. You understand? By the left hand side, I mean like this. These highs. Check which structures are being broken. By if it's going like this, be shaking the high. Since it's going up like this, be shaking the highs to know which structures are being broken like that. Which structures are being broken? Which structures are being broken just by the side. By the side, by the side, by the side, by the left hand side. Look left and see which structures are being broken. By you understand? So you could see the movement that if you were saying if the market actually broke this one, you're getting into the trade, and it broke it, pulled back for investors to come to. Okay, now see, this is a perfect example of what we are talking about. Can you see that when I'm going to do this? Listen right now. Look at, this is a structure. Yeah? I think this was the one we talked about. This is a structure and this is a structure. So it went like this and broke this structure. This structure has been broken because this candle closed above it.
Yes, but I didn't break it down.
Yes, I'm sorry. So it broke this structure, but it didn't break the other one. So if we are taking our demand setup, we should be focusing here and waiting for price to pull back, because we've got a break of structure. We don't need this one anymore because we've gotten a heavy break of structure, and you could see the type of candle that broke that structure. It's very heavy and a beautiful tall candle. So these type of candles, when you see it, this type of candles, load the loss, because it's actually going like it's like it's an institutional candle. It's called institutional candle. They are institutions. It's showing us that yes, the institutions are here. That is what these type of candles signify. You understand? So we've
Mm-hmm.
got everything we need. This type of candles, this type of beautiful candles, they are institutions buying and dropping the market. So you train your eyes to know and to see this type of heavy candles with momentum. So we broke this structure, but it didn't break this structure. But we've had other break of structures that are going up. You understand? So it gave us this beautiful demand. We should be waiting for the market to pull back into our demand, so that give us this beautiful hammer. We are still going to talk about this hammer. It's a signal candle that usually occurs in supply and demand. So it tapped into our hammer. We should be taking our trade to take this high here, because we already know that the market has been breaking structure to the upside, and since we got a demand here, it should also keep breaking highs. So our take profit should be around this high, because the market is going up. By just looking at it like this, yes, the market is going up. Do you understand? Do you understand what I mean?
Yes.
Yes, because the market has been breaking structure to the upside. So this type of trade will just be a normal a sweet type, this type of, like, it's a sweet type of trade. They didn't break your high. So how we trade is, this is your demand, because the rules of supply and demand, the type of trading that we will be doing is, you need a setup. This is what I mean by a setup. Your setup can be either a demand or a supply. So this is a demand. So you have a demand, then a break of structure, then a pullback into the demand, then you buy. This is a demand. I will still talk about the demand. The first candle that touches the demand is called a signal candle.
Wait, I don't understand.
This is not part of the market structure. I'm just trying to explain something based on this thing. Okay, so in supply and demand,
Mm.
in supply and I think we should. I don't want to complicate things. This will be getting away from what we are actually discussing, and I wouldn't want you to get confused. So I think, and I feel like we should finish talking about these structures first before we continue, before we deal on supply and demand, because you could get confused when I talk about supply and demand. But we are going to talk about that. You understand? I don't want you to get confused while talking about supply and demand. All right.
Okay.
Okay. So we good. So this is uptrend. This is uptrend. This is uptrend. Let's know if we can find a downtrend. Do you understand, and do you have any questions about this?
I understand.
Okay.
Hmm.
Okay. So what's the dominant color on this side?
On what side? The
Yeah.
left.
What? Which color?
You say what side? Okay,
What's the
just this way.
dominant color? The most dominant color of candles you are seeing this side?
Mm, mm, should be green now. No. I don't know what side you're talking. Is you everything on the screen? Then it should be red.
Yeah,
With everything on the
I mean
screen.
this side. This side.
Which side?
This side. What's the
Okay,
most
okay.
dominant color that you're seeing?
Red.
Yes. That is how you can use your eyes to know which trend is actually which trend we are currently. You understand? Because by looking at the colors, you should know where the market is actually going to. Then you can come with your structure. When the market is going down, it will be breaking the structures below. But
Mm,
when it's going up, it will be breaking the structures above. That is it. Can you see the structures is being broken? That is being broken here. Like it broke this structure. Only since we know that red candle closes below and green candle
yes.
closes above. So it's always a red candle that will confirm our downtrend by when it closes below a structure that we want being broken. You understand something like that? So it's usually the red candle. So this red candle broke this structure because this red candle completely closed below this level. Do you understand?
Mm-hmm.
Then you went, pardon?
Yeah, I'm here.
Okay. So this one, he had this structure. This candle closed completely below this place. You can use this wick. You can use the lowest of this wick. This candle closed below, so it broke this structure. You had another structure here. This is also a structure. You had another structure here. It went up, came down, broke this structure. So these are the type of candles that I tell you that are institutional candles. This type of candles are institutions dropping this. This type of candles are institutional candles. So you could see that it's breaking structure to the downside. Breaking structure. The red candles are closing below the structures. This is a structure of the market. It is a structure of the market. So when the red candle closes below the structure, it is telling us that the market is breaking the structure to the down. It's breaking the structure to the downside. When I mean it's breaking the structure to the downside, it is going to the downside. But if it is breaking structure to the upside, you will be like the market is breaking structure to the upside, breaking the major structure, the highs that you have. But if it is going down, it will be breaking the lows, even breaking these lows, not just this one that are by the side, but the ones that are here too. It will be breaking all structures to the downside, everything going down. Do you understand what I mean?
Yes, yes, I understand.
Okay. So um you have to share your screen so that you like use your hand and play some things so that I would